I'm Jim Juback, and welcome to this week's Trend of the Week video. This week's Trend of the Week is U.S. economy, period, last man standing. If you look at the global economy, the U.S. economy is zipping along at, not a great rate, but surprisingly positive given how the Fed has been raising interest rates. So we're seeing, we're not seeing yet a quarter that dips into the negative. So people who were saying, hey, we're going to get a summer recession, me at one point earlier in the year, have been wrong. So it looks like we may dodge the recession. I still think we're going to get one later in 2023, but maybe not. But in comparison to the rest of the world, this is the best economy in the world. China is growing faster, but China always has to grow faster to absorb new workers, and it's not doing a very good job because it's not growing fast enough to do that. At 4% growth, which is what we're getting right now, you still have huge unemployment problems, and especially you have huge youth unemployment. I did a video about that last week, so look it up. Unemployment rate among 16 to 24-year-olds in China is running about 21% right now. Horrible, and it filters into the whole psychology of the Chinese consumer, as in, hey, these guys don't have any money, they don't have any jobs, maybe I ought to be saving more myself. And so we're seeing some wobbling among consumer sentiment. The problem is not just limited to China, though. So recently we got good signs that the problem has expanded and is going to run for a while in the eurozone. The European Central Bank looked at inflation and said, we're still seeing 6% inflation. Our target is 2%, like the Fed's. So they raised their benchmark interest rates by 25 basis points 2 weeks ago to 4%. They're showing no signs of slowing down. They really want to. The ECB is much tougher on inflation than the Fed, a much more serious inflation fighting. And so I think we're seeing no hesitancy, no wobbling on the part of the ECB about continuing to raise rates. The eurozone growth is now down for the last 5 months. It hit a new low in June, and the PMI, which is the Purchasing Managers Index, which is a good index about looking a little bit forward about how much purchasing managers are how they're thinking about what they require to buy for their companies. It fell to 50.3 in June from 52.8 in May. 50 is the level on this index which separates expansion from contraction. So you see we're getting very close to recessionary territory, and it looks like there's a good possibility that the second quarter, when it's finally reported at the end of June, is going to be slightly negative. That it's not a recession. You need 2 quarters down to beat a recession. But a negative result for June would mean that the global economy really can't count on China or the eurozone to drive growth. And the U.S. economy is not that strong, but it does look like the last man standing. So if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do our next one. You can find more of my stuff for free on jubackpicks.com. It's got 3 portfolios, including some long-term, 12 to 18 month, and a dividend income portfolio. You can subscribe to my Juback AM portfolio which has got 6 portfolios. We just finished running a 50% off mustache sales because it was the 50th anniversary of my mustache. My mustache is arguing that it was so popular that we should extend it, and I think we'll probably run it again after the 4th of July. So look for it in your mailbox. That's 50% off. That'll be $99 instead of $199 if you're a new subscriber. If you're a current subscriber, we'll let you extend your subscription for 12 more months at the $99 mustache price. So look for the opportunity to save money, fight inflation now. So thanks very much for watching.